Let's get this. Turn up, turn up, turn up.
If I had to break it down, the reasons why I stay awake. Number one's the endless cycle of the choices that I fake. Number five's a late night spiral, scrolling through my phone. And somewhere in the middle is the fear of being all alone. My calendar's a battle zone, my coffee's gone cold, and my dreams feel like a sweater that's unraveling with holes. It's like a freight train slamming on a rickety track, or a kite in a hurricane that won't come back. I'm stuck, I'm strung out, I'm a little offbeat, but I'm still tapping my feet. Yeah, I'm still tapping my feet. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. Got a letter from my landlord saying rent's overdue. And the fridge is humming louder than a midnight blues tune. I've been patching all the cracks with the roll of duct tape, but the walls are caving in and I can't escape. Every what if that I whisper goes into a roar. I'm a ship without a captain headed straight for the shore. It's like a parachute pack with a hole in the seams, or a firework fizzling before it gleams. I'm afraid I'm faded, I'm a little off key, but I'm still humming my dream. Yeah, I'm still humming my dreams. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. There's a spark in the chaos, a light in the haze, a rhythm in the madness of these tangled up days. I don't need perfection, just a second to breathe. A little bit of hope is all I really need. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out. I'm gonna scream until my lungs give out. Live a little louder, make it count. I'll keep pushing till the walls come down. I won't let go, I won't back out.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. Welcome back to another episode of the Kohrs Show, where we have officially made it to a beautiful new Monday and also November. Happy November to all of you who celebrate. I'm particularly excited because not only do I love this time of the year, but it also happens to contain my favorite holiday. Thanksgiving, without a doubt, is the holiday of all holidays, and here we are ready to celebrate. Folks, I hope you had a phenomenal Friday afternoon. I hope you had a phenomenal weekend, and I hope thus far you're having a pretty great Monday morning. We're going to be getting into it. Of course, we're going to chit-chat about the major macroeconomic news, really the U.S.-China trade deal, bringing it back to some of the drama in the U.S., what's going on with the government shutdown, what's going on with SNAP benefits, and then, of course, we're going to be getting into the stats, facts, and figures. It's like how I really enjoy kicking off the month and the week, where you guys can understand the seasonality and also what's going on in the world of options. But here's the TLDR there, just for those of you, first of all, the merit. But for those of you who didn't watch the update video last night, getting you prepped up for not only the month, but also for the week, this upcoming week, starting today, well, really starting yesterday when the futures market opened, but all the way up till Friday, is the single most bullish week of the entire year. Does that mean it's going to play out that way this time around? I don't know. I'll tell you better Friday at market close. But I'm just letting you know, historically, over the past 3, 5, and 20 years, this particular week is absurdly bullish. So could end up becoming a self-fulfilling prophecy, but I should also note that over the past 2-ish months, when we've had bearish seasonality, the market's still been bullish. So maybe we're in this like awkward upside down type of situation. Maybe. Anyway, we'll be getting into that. And then really the hot news of this morning is related to individual equities, and basically lots of partnerships being announced this morning, particularly within the tech sector, which is why pretty much ever since, I don't know, about midnight last night, the market is just up and up and up and up. We have some news to dive into, so we're going to be breaking all of that down. I have some other things that we should just chit chat about, get on the same page for the casinos open today, and then fast forward to about 25 minutes from now, the market's going to go dingity ding ding ding, and we're going to see if we can make some money. So here's hoping you had a great weekend, made a bunch of money last week, and the only thing I hope more than that is that you make even more money this week. If you haven't already, before we get into all the nitty gritty of it, if you could help me out, don't forget to like, subscribe, turn on those notifications, say hi to your best friend and your worst nemesis in chat. All that type of engagement really does help me out. It gets this video, this show in front of other people who might be interested. Obviously, it is for you to like, subscribe, turn on those notifications, to comment. None of that is something that you have to pay for. So if you just want to say thank you, if you want to do that stuff, it would be absolutely awesome. And with that being said, let's take a little looky-see. S&P 500 futures rise to start November trading. Like I said, November as a month is very bullish, and the first week is uniquely very, very bullish. And that's already what we're seeing in pre-market trading, pretty much returning to the high that we saw on Friday in both the SPY and the Qs. The Russell is pretty much there as well. Bitcoin over the weekend getting hit, going from 111 down to 107,000, but showing a little bit of a reprieve right here as we're getting closer and closer to market open. How the U.S. economy has defied doomsday predictions on tariffs. Inflation is lower than expected after President Trump's steep levies. So I really wanted to get going with this because maybe I have a bone to pick with all these economists and analysts and political hopefuls who, do you guys remember March of this past year, heading into April, when we were kind of getting going with this concept of, okay, Trump's starting a trade war, and then we got all the information in April, and the market in the short term took a hit. Do you remember all those doomsday sayers? Do you remember everyone promising us that this was going to be the worst depression, recession, stock market crash of all times? We're not even a year removed from when all of mainstream media seemingly was saying this is going to end horribly. We're not that far removed of basically all these economists telling us like we are bound to go to zero. This is the worst thing ever. And I just think it's interesting that not only does everyone seemingly have such a short memory because they all got it wrong, but then also this is like a really good reminder of analysts. They're as good as anyone else. They're half right the time, they're wrong half the time. If you're continually calling for the market to explode to the upside, eventually you're going to be right. If you're continually calling for the market to fall, eventually you're going to be right. And this is one thing that I really don't like about stock market, well, I guess also economic prognosticators, if you will, for your SAT word of the day. But what I hate is the fact that people are like just vaguely bullish, vaguely bearish, and then when something a little bit fits their overall prediction, they're like, see, I was right. But they never give you size, they never give you timing, they never give you anything actual useful that you could do with your accounts in these markets. Rather, it's more of like a talking point, and they win I don't know, like social credibility. And I guess congrats, we'll give them claps, where if the market is ripping and you're bearish that entire time and there's a little red day and they're like, see, I told you. It's like, dude, you've been calling out for bearish for months ago. We're double digits above where you called it out, and you think you're quote unquote right, or vice versa. In an entire rip, or I guess you have it both ways. I'm not saying it's only against the bulls or it's only against the bears, but right here, the wrong time and time again. These analysts, these PhD level economists, folks, I'm telling you this, even maybe if you're in the audience right now and you don't have a PhD in whatever, economics or something in that particular world, well, don't worry about it, because you're as right as they are. Like, you are 100% as right, or as often as they are. 50-50. Sometimes you're right, the other times you're wrong. But it doesn't seem like these people who have those fancy schmancy pedigrees on their wall are as right as anyone else. Like, truly, it drives me up a wall that this is something we even have to discuss and consider. But just remember, because you hear things on the internet, not only from talking heads like myself, but I'm talking about the fancy people with ties on, that doesn't mean that they actually know anything. Please, it does not mean that they know anything of utility. However, even with this, and I kind of want to turn this over to you before I cover this article, right now, if I show you the overall market, here's the S&P 500. Obviously, things were pretty good into February of 2025. This is when we first find it out. Excuse me. This is when we first started to find out about the concept of the trade war, and we got hit, and then we bounced, and then it got really bad, and then things were fine, and we completely recovered, obviously making seemingly new all-time highs basically every other day. I feel like a broken record when I'm telling you guys in the update videos that congrats, we hit another new all-time high. But anyway, at this point, I mean, if we were to do a little, hang on, can I even do the fib retracement on this? Oh, wow. We pretty much just undershot. I didn't know that, but for my fib traders in here, we almost hit this fib level at 6953. It's all the way up to 6920. But anyway, quite the jump, as you can obviously see from this initial drop. But anyway, my question is not really, I don't know, I don't find it that interesting of the fact that so many people were so egregiously wrong. What I find to be more interesting and more useful for all of us involved is where we're going next. And my question to you is this high, 6920. Do you think, like all these previous highs in here, it's just temporary and we're going to quickly forget about it? Or do you think for a certain amount of time, maybe a couple days, couple weeks, couple months, this is actually going to be the high water mark? Very, very curious if you think that this is about to take a little bit of a breather. Very quickly, I just want you to know, Profit over on Rumble, message was removed by moderator. That has something to do with their automated system. That is not coming from our end. I don't know what that is. I'm getting the message right now. Something on like literally the website's end just murked all your messages, and I'm not really sure why, but I just wanted to be very explicitly known that did not, obviously, I'm doing the show. I'm not moderating your chat. My other mods aren't even up yet, so I don't know what that was, but that was from like Rumble's actual system and not from me or anyone on my team. I feel like that's pretty important to note, because I don't think in the history of you being in chat, we've ever moderated a single one of your chats. So some sort of bot system, I just want that out there. That was not on me. But anyway, I want to get your thoughts. I want to ask your opinion. Do you think this is the current high, or do you think we're just going to keep charging higher? Because Berkshire Hathaway, obviously Warren Buffett's brainchild, they've been calling for like a serious hit for a while, like a very, very serious hit. Berkshire's operating earnings jumped 34%. Buffett buys back no stock and raises cash hoard to $381 billion. Now, to be fair, he's been sitting on this cash this entire time. So it's not like he just all of a sudden turned to cash up here. He's been sitting on cash. But for some guy who clearly has a longer vantage point, if you will, of the market, where he's looking multiple years, if not multiple decades out, my question is, like, do you think this guy is just completely wrong, or do you think the bulls are completely wrong? Because we're getting to that point where things are like getting disconnected. The stock market's at an all-time high, and yet we're seeing a large split in the economy. People who are in the upper income are still spending like no other. They're treating it like it's the 1920s and it's time to party. However, in other part of the U.S. economy, let's say the lower income bracket, they're actually starting to show serious issues. We're seeing auto loan delinquencies spike to new all-time highs. We are seeing small businesses file for bankruptcy at rates not seen before. We are seeing various other signs, and what's weird is it's split into a clear dichotomy of upper income is still spending and acting like nothing is wrong. And then on the other side, right now, in like real measurements, we're seeing lower income like start to say, not only are we feeling pressure, but we're feeling like legitimate pressure. And this is all happening as the stock market is at an all-time high. So I'm by no means saying, hey, you got to be absurdly bullish here, or no, it's time to be like doomsday bearish. I'm just pointing out the differential of we're seeing things in a more significant manner than we've previously seen it start to split in other ways. What the fuck? Wait, what is going on? Profit. Is he here? Can he actually still talk? Why did the bot, hey, can Profit respond at all? And if not, how do I even fix this? Profit, I clicked on your name. It's not even telling me if Profit, some weird, it's not even giving me the opportunity manage. Hang on. What do we have over here? All right, we have all the bots. Hang on. No, he's not even on the mute list. I don't know what's going on here. This is strange. I just looked up, like, obviously I have access to all the people. Basically, there's a lot of fake Matt Kohrs accounts. Yeah, I just checked the logs too, Chaos. This is, I don't know, something's up. Uh-oh. Profit, you're going to have to make a burner account and tell us what in the world you're seeing from your end, because something is strange here. But I just looked you up on the list, and so did Chaos. You're not in the list, but it seems as if you can't talk. I'm confused about this one. Anyway, very quickly, we'll figure that out when the market opens. I do want to let you know, obviously, start of a month, that this period, the start of November to pretty much the mid-January, is historically very bullish. But right here, this first week of November is very, very bullish. So if you look over the past 5 years, this month, obviously bullish. The past 3 years, this month, very bullish. And then it gets interesting when you turn it over to the weekly and you realize that this is the single most bullish week of the entire year based on the past 5 years worth of data and also based on the past 3 years worth of data. So what's about to kick off in a mere 12 minutes, once again, is over the past 5 and 3 years worth of data is the single most bullish week of the entire year. Now, just because it's gone that way historically, is that a guarantee for this upcoming week? No, that's not how statistics work. I'm just letting you know how things have played out historically. Very, very important. This time around, it's going to be related to the hot topic political news of the day. Democrats urge Trump to engage in talks as shutdown closes in on a record. The impasse has endangered food aid for millions and fueled delays at airports. So right now, we're not really getting that much of a reprieve in the anticipation of the government shutdown, or I should say when the government shutdown ends. As of right now, there's a 54%, according to Polymarket, of the shutdown going past November 16th. Looking at Kalshi right now, the estimated shutdown days is 46, and we're currently at 33. Once again, they are looking about roughly mid-November, and we are getting to the crunch point where a lot of people are going to start to feel a lot of pain. Treasury Secretary Pacent says SNAP food benefits could restart by Wednesday. Yeah, they could. That is, wait, okay, I'm so back. I got muted for some time again. Why? What the fuck? I don't understand what the bot system is picking up that it did that. Profit, if you could like DM me on Twitter and just tell me roughly like what your messages were, because I don't know if it's picking up on certain key terms. I don't know what it is, but something about it. Just, I don't know if you could still see it on your end, and maybe if you just want to screenshot me what you were sending, but something with the bot got a little weird. So I could always send it to the tech team at Rumble, because maybe there's just like some errant code, a little bit of bug. But anyway, maybe these benefits restart for all the people who desperately need the benefits. I feel for them. For the people who are abusing this system or something such as EBT, well, I don't really feel for them, but it sucks because you kind of don't know who is who. Unfortunately, we are in a situation where there are people who putting food on their table is 100% dependent on this. And just for whatever, maybe being dealt a bad hand in life, they need this. And as the world's most powerful, influential nation, I'm of the opinion that we should help our weakest. However, the system itself is also being strained by the fact that there are people who legitimately abuse it. Obviously, depending on the publication that you read, you're going to see differing amounts of what is the abuse rate or what is like actual legitimate, for lack of a better term. So that's going to be up to you and the news source that you consume it from. But my point is that it's one of these things that like there are bad actors who kind of ruin it for the rest of it. So to the people who legitimately need this, I mean, I think just as a human, it's safe to say that your heart goes out to them. Like this is just, like I said, as the most powerful, influential country in the world, we should be able to take care of our own who are in need of assistance. And it's crazy that it's getting to the political level where that's the bargaining chip. Like literally some kid going hungry or not has now become a political bargaining chip, which just absolutely drives me up a wall. The other hot political topic right now is the U.S.-China trade war, where over the weekend we did get some news from China's side. They're going to suspend new earth export controls, issue general licenses for exports of rare earths, take significant measures to end the flow of fentanyl to the U.S. Obviously, that's a big win. Suspend all retaliatory tariffs since March 4th. Suspend all retaliatory non-tariff measures since March 4th. Purchase at least 12 million metric tons of U.S. soybeans. On the U.S. side, we're going to lower tariffs on China by 10 percentage points and extend the expiration of certain Section 301 tariff exclusions until November 26th. So this is kind of codifying what the deal is going to look like. Going into this, it was, for lack of a better term, like a handshake deal of what's going on between the U.S. and China. Both sides, President Trump and President Xi of China, were basically saying, hey, yeah, like we have a good deal, like this is going to work out. And then you could see 2 days ago on November 1st on Saturday, we got a little bit more of like what the actual deal is going to be, which is part of the reason why in pre-market trading, things are looking good. Also, if you want to know more about this did get posted to True Social. President Trump says the U.S. could become a third world country without tariffs. If you ask me, that's a little bit hyperbolic. It's a very long message. You can read it if you want to. I just want to let you know that it did come out over the weekend and it's somewhat related to the trade war in a general sense. So if you want to read his thoughts, go over to True Social and check that out. More specifically, diving into this week and really today, remember the government shutdown. So there's some things on this list that we might just not be getting with the government shutdown because when the BLS, the Bureau of Labor Statistics, is not working, they are not giving us those numbers. But on top of it, they're also not collecting new numbers, which could be very problematic, especially heading into additional assumed rate cuts, specifically in December. If we're still talking about the government being shut down in December, we're going to have some problems. So fingers crossed that we are not dealing with it. But this week, you can see we're getting a lot of PMI and prices numbers for manufacturing, for services. We're maybe getting some JOLTS numbers. So in terms of macroeconomic events, yeah, we have some stuff, consumer sentiment, consumer credit, but we don't have like the mega ones like FOMC decisions or I don't know, or inflation or anything of that line. So I would say, quote unquote, a normal week with some of these probably not actually going to be making it to the finish line. We are in earnings season. Now, remember last week, based on the market cap of the S&P 500, most of the reporting was last week, but this week, there's still important ones, but I would say that this week it's actually more of the market cap of the Russell 2000. So still important earnings to pay attention to. Early this morning, we heard from Berkshire Hathaway. Like I said, the most cash on hand they've ever had. Lots of you in chat are big fans of Palantir. That is reporting after the market closes. So if you are paying attention to PLTR or HIMS, I guess they're both popular, but Palantir, I know we have a ton of Palantir profiteers in here, if you will. I know a lot of you are up a lot of money on Palantir. You're going to want to pay attention to that after the market closes today. Tomorrow morning, Uber, Shopify, Spotify, Pfizer, Hut 8, BP. After the market closes, another important semiconductor play, AMD, and also Supermicro. A lot of people playing calls on that. We saw that on the Spot Gamma Flow alert early this morning. Wednesday, Novo Nordisk, one of the largest pharma plays. You have McDonald's, you have Unity. On Wednesday, after the market closes, you have Robinhood, IONQ, Qualcomm, ARM, Snap. Later on this week, D-Wave for any of you playing quantum computing. We have DraftKings, you have Archer, you have Airbnb, and then hey, to wrap up the week on on Friday, you have Wendy's. Damn, I am not speaking well at all this morning. So my point is that we're still in earnings season, not as big, not as impactful as last week, but still very, very important. And even though they already reported earnings, we do have some big news this morning. Microsoft signs $9.7 billion AI cloud deal with IREN, which, as you can imagine, so here's a look at Microsoft, and we actually have a couple deals to go over this morning. Slightly green in pre-market trading. IREN is actually up 21% in pre-market trading. I know some of you in chat have been playing this one, so if you're waking up to these massive green gap up gains, congrats to you. But like I said, the fun does not end there. Nvidia shares up 2% in pre-market as US approved sales of its chips to the UAE. So Nvidia, the biggest company in the world, is getting even bigger, up about 2.45% in pre-market trading. Once again, a deal or approval to sell stuff to the UAE. And last but not least, OpenAI signs a $38 billion compute deal with Amazon, partnering with cloud leader for the first time. Now, remember, the OpenAI is not publicly traded. The most exposure you could get in the public markets is via Microsoft. But obviously with Amazon, right now up an additional 4.5%, closing out last week at 244 after its very good earnings, gapping up another 4.5% in pre-market trading due to this deal. So it's another day of AI deals, of everyone shaking everyone's hand. Microsoft's involved, OpenAI, Amazon, Dell, IREN. Like, you have a lot of companies that are involved in this. So I guess AI is continuing to lead us higher and higher and higher. If you haven't already, don't forget to sign up for the newsletter, macros.locals.com. It's in the description of the video, and most importantly, it is 100% free. You've never had to pay for it. You're never going to have to pay for it. Every single Sunday, I give you a breakdown of what's going on in the market after you get to see really cool photos of my cat who was out trick-or-treating. Then you get a breakdown of the key earnings. I highlight the ones that I think you're going to care about the most. Obviously, the major macroeconomic events, a little cheat sheet there. And then I give you the seasonality for each individual day, which brings me to the fascinating fact that this week, Monday, Tuesday, Wednesday, Thursday, and Friday are all bullish. Even though the whole week is bullish, it's crazy to also note that every single individual day has also been favored by the bulls. So it's not just like one day is so strong that it kind of helps out. Like, literally every single individual day from a seasonal standpoint is favored by the bulls. Now, obviously, just as a person who respects statistics, I should let you know that that doesn't mean it's a guarantee. Obviously, if you're coming in here and you're like, hey, this guy is saying the whole week's bullish, every day's bullish, I'm just going to go bullish and it's going to work out. No, it might work out, but obviously there's a chance that, hey, we could end up having a horrifically bearish week. You don't know the unknowns. There's a lot of unknown variables and you never know, but also it could be more bullish than ever. So with that being said, I'm giving you the odds of what's going on, but just because the odds are favored one way or another, that's not a guarantee. Just because something, I don't know, let's just say hypothetically has a 99% chance of working out, well, it's going to work out 99% of the time. And that 1% of the time, it's not going to work out, even though it's statistically unlikely that that particular event happens. So I just want to remind you, yes, seasonally absurdly bullish for the month and specifically for the week, but not necessarily the end all be all that you're going to bet the farm on. Speaking of betting the farm and what not to bet your farm on, we should get the key levels of the day. So right now in pre-market trading, we are in the zone of 6,880. We're actually right kind of in between some positive gamma up here, some negative gamma down here. So stability above, volatility below. A little bit choppy of an option structure. You're watching 6,875. You have 6,0890. Some people are playing 6,900. You have a little bit of a call credit spread up here at 6,915. We're going to check out how that changes out throughout the day. But just so you know, roughly where my cursor is, We're right above the high from Friday. We're right at the high from Thursday. We're right where my cursor is. We're right in this zone. So if you're bullish, your targets are pretty easy. You want this support to hold at 880, then you're targeting 900, then 915, and the 915 level is going to be key because that's where you have some people kind of putting up a wall of resistance. However, if you happen to be bearish and you're playing for this breakdown, well, obviously you're looking for the breakdown of 80 and 75, and then you're looking for a push to the start of the transition zone at 65, and then you probably could target the closing value on Friday at 41, and then from there you're looking for the breakdown of Friday at 814, and then from there you have the key psychological level of 6,800. I am by no means telling anyone in here to be bullish or bearish. And in fact, I think if you're trying to predict, is today a bullish day? Is today a bearish day? I think that is very, very silly. Remember, active trading is a game of reacting, not of predicting. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. All right, let's get all these charts ready. Let's see what in the world is going on. We are seeing upside. There are now downside gap fills. Both the SPY and the Qs opened above their high value from Friday, which means we have downside gap fill opportunities. The SPY is almost there, 685.08. The Qs have a little bit of distance to go, actually a full dollar to go, down to 634.20. And you can see the Russell is already kind of getting hit out of the gate, dropping 0.2%. Watching the VIX as well. This was a really good leading indicator on Friday to pay attention to what in the world was going on and what in the world wasn't going on. So out of the gate, watching the VIX, watching the Russell, I am kind of curious IREN to see what's going on there, to see if this holds or not. Obviously, giant downside gap fill there, but just be mindful because right now, if you look at NDX, you have 3 downside gap fills. I get that we're pretty much at an all-time high, and of course the bulls might absurdly dominate today, but I wouldn't be doing my job if I didn't call out the fact that there's a downside gap fill on NDX to 26,063, 25,418, and 25,127. So 3 downside gap fills on NDX. You also have various 2 downside gap fills on SPX. We did have one earlier this morning. We literally just filled it, and now you have one down to 6807 and 6749. So from a technical perspective, you might want to be paying attention to that. And then obviously from an options perspective, we want to be paying attention to the flow. If you are looking at price structure and price momentum, in my humble opinion, those clearly favor the bull camp. However, if you're looking at the technicals, i.e. the downside gap fills, that's clearly favoring the bears. So right now we're kind of on a daily chart, we're kind of getting a little bit of like mismatched information, if you will. Clear downside gap fills, but yet price structure and price momentum and seasonality are absurdly bullish. So for right now, and I'm more than happy to let you guys know my bias at one point or another, but right now, I'm stuck a little bit in neutral just because, in my opinion, we're getting conflicting data points. Especially one thing that like really starting to stick out in my mind is this weird distribution that we're getting in the option chain. We have positive gamma all the way down here around 6,700, but we have positive gamma also up here around 6,950, and we're kind of stuck in this lull in the middle. So which way are we going to go? Are we going to this positive gamma, or are we going to this positive gamma? So the options market, the structure of the options market is telling me people are betting bullishly, but simultaneously they're betting in a bearish manner as well. So the options market is confusing. There are technical downside gap fills that favors the bears camp, but then when you look at the daily chart, higher highs, higher lows, and we're above all of the major momentum EMA levels. So that's favoring the bull camp. So with this, I would say don't be married to either side, as I normally do, but just don't be married to either side. This could easily break in any direction for any piece of news at any moment. So as always, respect your risk, respect your leverage, stick to your trading plan, and understand even with quote unquote perfect setups, sometimes lady luck is just not on your side. So even if you're following your plan and doing exactly what you should be doing, that doesn't necessarily mean you're going to make money. And as much as I think that's good advice, I'm also telling you guys in general, just to remind myself that, yeah, sometimes just you got to cut it. Even if everything is there that you want to be there for the trade setup, sometimes just You don't know the unknowns. And I think that's an important thing for us to all remember is sometimes you just don't know the unknowns. Anyway, the SPY did get its first downside gap fill, and the Qs have about $1 to go. We're watching 634.20 is the downside gap fill, the first downside gap fill, but there are multiple. All right. Here we are, the Mag 7 options flow thus far, granted we're only 4 minutes into the day, but thus far is looking pretty freaking good. The S&P 500 is looking the exact opposite. I forgot to switch this up and show you guys. I've been good thus far. I didn't break my trading rules. It wasn't like I was trading in pre-market trading. I have 5 new evals on Take Profit Trader. Those are just new as of this morning, but really what's interesting is I showed you on Friday. I know a lot of you guys thought I was going to go on tilt, but I didn't. I ended up making 2K per account right here. All of my apexes right here are up about $13,000 on 15 of my accounts. So they started at 50K. They're currently trading at 63. So 63 roughly on each one. I did put in a payout request. It's still pending right now. I put it in payout request I guess when the market closed on Thursday. On Thursday, I put in that payout request. And right now, they didn't approve it. They didn't deny it. I should let you know that they're most likely going to deny it because I'm pretty sure, you know how on Apex they have 2 different 30% rules? They have the 30% consistency rule, which I did not break, but then they had the 30% unrealized drawdown rule based on your starting day value. And I'm pretty sure on the first or second day of those accounts, I'm a little vague on it because it was so long ago, but I'm pretty sure on the first or second day I might have got really close. So maybe I got lucky, or maybe some accounts broke the rule but other ones didn't. I just wanted to let you know that right now there is a pending request on 15 of the 20 accounts, not on all 20, but on 15 of the accounts for 2K each. So 15 times 2, $30,000. So the money, I don't know, we're waiting. Excuse me. I know, last week when I was sounded horrible and actually, we're about to get the downside gap fill on the Qs. Congrats if you played it. We're going for it. That's a nice play. Obviously, recent history tells us it doesn't work every single day, but if you play that, you could already be done. At market open, you could have played the SPY. At market open, you could have played the Qs. Well, the Qs technically were off by a cent. So technically hasn't hit yet, but you would be done. You made a little bit of money on the SPY. You're about to make a lot of bit of money on the Qs, and you are looking pretty freaking good. Hey, a question. Do any real firms have rules as specific as prop firms? I think what you're meaning is SIM-funded prop firms. Prop firms themselves have, because that's like quote unquote real money. Like you're putting up money and they match you even more after you prove you know how to trade. No, that's real money in real markets and you can swing trade, but that's normal prop firms. I think what you're referring to is the SIM-funded prop firm rules. If only Apex got rid of the consistent rules when funded, it would help traders. Yeah, their goal isn't to help traders. I understand all of these. There are a couple things of the SIM-funded world that really piss me off, and I would say one of the we just got the downside gap fill. Congrats to everyone who played that. One of the things that I don't like about SIM-funded, and this is not a knock on Apex, it is, but it's a knock on all of them. If you look at Apex, if you look at Tradeify, if you look at Top Step, if you look at My Funded Futures, if you look at all of them, they all present it in a way of, hey, we are here to partner with good traders. We want to be better. We want traders to be better. We're here to help traders on their journey. No, they're not. No, they're not. I hate the marketing of SIM-funded. I love SIM-funded, but just because I like it and I use it, that doesn't mean I think every single aspect of it is fine. Yes, in the modern era, I know this is crazy, that you could think after weighing out pros and cons that something has more pros than cons, but then that doesn't mean you exclusively think it has pros or you exclusively think it has cons. There are cons to the world of SIM-funded trading. I've said this before. I'm going to say it again, but I hate how it's marketed. Many of these companies market themselves as in, hey, we're here to partner with you. We want what's best for you. That's as stupid as when you walk into a casino and you're at the, I don't know, Win or something like that, or the Aria, and they're like, hey, we want you to win. We would love for you to win. Oh, you want to play blackjack? We'll help you count cards. Oh, you want to play poker? We'll tell you the best move. No, It's all a marketing facade. They all want you in the game. Like, I think there just needs a bit more honesty. Hey, you think you're a good trader? Cool. We think you're a bad trader. If you're right, we'll pay you. If you're wrong, you'll pay us. So like I said, I don't think that any aspect of anything in this world is exclusively good or exclusively bad. And one particular thing I don't like about SimDefunded, and I'm not knocking on an individual firm, I'm knocking on all of these firms, is how they market it. So the question right here, this little soapbox rant here, all started because someone said, oh, like, why don't they do this rule? It'd be easier. Well, yeah. That's why they don't do it. It's because they don't want it to be easier, because like a casino, you're trying to take their money and they're trying to take your money. Like, that's it. Very, very quickly, if you guys could do me a huge favor and check out what is pinned to the top of chat, and it's also in the description of the video. Shout out to right now our longest term partnership. Shout out to Public. This is my favorite place to trade options. This is right now where I have overall market puts and I have VIX calls. Those are my current live swing positions. Shout out to Public. This is the number one place, in my humble opinion, to be an options trader. If you're watching this right now and you don't have an account on Public, remember, you're allowed to have multiple brokerages accounts. It is free to download. It is free to sign up. There's a good chance if you're a returning viewer, you've either seen my Public account or you've heard this pitch before. And if you don't have one yet, make this the day you sign up and at least check it out. I'm telling you, as soon as you get into their system and you realize what's going on, you're going to realize why I like it so much. But the name thing is on the screen right here. You earn rebates. There is no other brokerage I know of in this world that pays you a rebate every single time you trade an options contract. It doesn't matter if it's a call. It doesn't matter if it's a put. It doesn't matter if you're buying, doesn't matter if it's you're selling. You are earning a rebate, as in money back, every single time you trade an options contract. Compared to other brokerages, no matter what, you're better off on Public. If you're profitable, you're going to be more profitable because of the rebates. If you're not profitable, well, the sting is going to be a little bit less, because at least you're also getting those rebates. So check it out. Use what is pinned to the top of chat and in the description of the video, because it's a rebate tier system. Not every, like, we're not all getting the same. So to start out at a higher tier, you're going to unlock that if you're pinned to the top. Like, use that link pinned to the top of chat and in the description of the video. So once again, start out the higher rebate, check it out. There's really no downside harm to you. In my opinion, it would be crazy for you to not, at minimum, just check it out and see if you like what's going on. If you like it, great. You're going to realize what I realize, and this is where I trade options. And if for one reason or another, it's not for you, well, no harm, no foul. No one forced you to use it anyway. So like I said, pinned to the top of chat and in the description of the video. This guy tries to sell everything. Remember Robinhood and Webull? Have you ever heard of the concept of people growing and learning? Back when I was with Robinhood, it's because it was the only retail-focused app I ever knew about. And then from there, I was like, okay, it's a little weird. It's a little clunky. Webull seems a bit better. You start trading on Webull, and then you realize that brokerages can shut down, and you realize what payment for order flow is. Sue me. Sorry, my apologies that I wasn't born with all knowledge known to man. My apologies that as I grew up, I matured and learned things and realized actually what's best for me as a trader and also what's best for you guys as an accumulator. My apologies. I will next time, in my next life, I will make sure to be born with all knowledge ever, and I will never be able to update or mature as a person. My bad. My bad. I like that. That's honestly on me. As a content creator, I should 100% have understood all of the market structure intricacies before ever doing anything. Yeah, that's next time. Someone says, I love Webull. Well, you might like Webull. I'm just letting you know you're getting hit with payment for order flow. Your orders are getting, like, you're not getting a rebate. No other one gives you a rebate but Public. Not to mention, it's called sponsorships. Lord forbid you try to make money off your career. Yeah, you're not allowed to do that anymore. You're not allowed to pay your bills. But more important than the fact that I'm not allowed to pay my bills, I think it's very, very important to note that it's my fault. You guys are right. I should have known everything about the stock market ever before making a single video. You're not allowed to grow and mature as a content creator. You're not allowed to grow and mature as a human. You're not allowed to admit when you were wrong in the past. You exclusively have to be right from the get-go and never change it ever. That's important. How does public afford the rebates when others don't? No. You don't afford it. When you trade options, the options market makers, they pay the brokerage for the orders, and public is splitting what they are paid with you, the trader. Something like Webull or Robinhood, they keep all of the payments from the market makers. That's why they do it for free. So public does it for free, but then they give you half of the money that you are generating. They are splitting the payment for order flow with you. Once again, that is on the option side. Options market making and stock market making are two distinct things, so I don't want to really get into the nuances here, but I just want you to know that those are separate entities. There are options market makers and there are stock trading market makers. On the stock side, public does not engage in payment for order flow. They trade on lit exchanges, while on the world of options, there's no such thing as lit exchanges for options trading. It's a completely different market structure, and you have to go to market makers. And when they go to market makers, the market makers pay them a rebate, and then they split that rebate with you. And in other ones such as Webull, Robinhood, Moomoo, what they do is when they send your orders to the market makers, they keep all of the payment for order flow. That's their model. What a loser. You don't even have the sum of all human knowledge. Yeah, I'm sorry about that. I was curious why they do rebates. Makes sense. Yeah, it's to attract users, obviously. At the end of the day, it's still a business and they're attempting to make money. And their bet is that they can do better by their client by attracting more clients and doing quote unquote the right moral thing. And as you're generating money for them, they're keeping some and you're keeping some. They're not keeping all of it. You're not keeping all of it. But that's still better than these other brokerages who they keep all of it. They keep every single cent of payment for order flow that you are generating for them. And while public, i.e. in the name public, they're trying to be more transparent about this whole process. Didn't public not used to have payment for order flow? They don't on stocks. And this is where I'm saying it gets it's a really nuanced discussion here. Payment for order flow is a different structural entity on stock trading than it is on options trading. You can avoid it on stock trading by going to lit exchanges such as the New York Stock Exchange, the NASDAQ, IEX. That option is, well, no pun intended, is not available to you when trading options. There's no such thing as a lit exchange when engaging in options trading, and it's just how the market structure of that derivatives market is set up. Matt plays with Weebles. Weebles wobble, but they don't fall down. That's pretty funny. Tesla. Whoa, Tesla's going today. And VIX is picking up too. I want to check out Tesla, but please don't forget that the VIX is spiking here. Anyway, Tesla is moving this morning. Tesla is very, very much moving this morning. All right, 5-minute was bullish, broke bearish. 10-minute was bullish, broke bearish. 30-minute was bullish, broke bearish. 4-hour is still confidently bullish, all in the S&P 500. The NASDAQ was bullish. We're now testing. It's not officially bearish, but it's now testing. 10-minute is still bullish. 30-minute is still bullish. 4-hour is still bullish. And surprise, surprise, we came right this level, 6850, which, why is my hair not perfect? My apologies. I know many of you come here just for hair tips and products. But anyway, 6850 has been the level. If I go to the 10-minute, you can see how much we've just been battling here. So on Wednesday, on Thursday, on Friday, 6850 has been that inflection point where the bulls are trying to get it above, the bears are trying to get it below. So surprise, surprise, where did we sell off to this morning? Once again, that major test level. Will we bounce or break from here? I have no fucking clue. No one on this planet can tell you, will we definitively bounce off this level or will we break down? All I can tell you is don't predict. If you're trying to play the breakdown, great. Risk the recent high. Keep your risk minimal. When it goes in your favor, move your stop to break even, and maybe you catch a fish. If you want to play to the upside, great. Risk the recent low. Try to play the bounce, and when it goes reasonably in your favor, move your stop to break even. In either case, if you're wrong and your stop is hit, don't move your hit. Your stop, it was hit. You got to move on with your life. I'm telling you, as an active trader, the way you can make $13,000 per 15 accounts in 2 weeks is by just being super disciplined about these levels. And hey, you're going to get stopped out a lot. at least the way I trade, I get stopped out a lot. And maybe you agree with that. Maybe you disagree with it. But it's all about minimizing your losses. This is a game of just 100% minimizing your losses. And I know many of you are tuning into the show this morning and you're thinking, Matt, this is now the second time you're telling us that you don't have all knowledge of mankind in your noggin. My apologies. My apologies. I never promised you that it was going to be a good show. Oh, it's a VWAP test. 80. 83. That's an $800 loss if I'm wrong. All right, we're taking a stab at it. I think I'm not the most in love with this trade just because buyers could step in at VWAP and maybe it takes an extra test or two. Obviously, if you've been trading VWAP is this white dash line, the volume weighted average price. It's just thought to be bullish above, bearish below. I might aggressively move it down to here. Okay. So I just de-risk. I'm only taking it. All right. And we locked that in. Cool. I locked in 400 and my risk is now only 4 points. I'm hoping that this is my one singular trade of the day. The most profit I could actually make is 1,500. I have to cap myself at that because of the take profit rules, which speaking of that, I should probably be doing some math. You know what? Fuck it. I'll just put this at 100 flat. And what I'm going to do, I might trail this even more aggressively. Hopefully, if it all goes according to plan, this is my one trade of the day. I make my money. I move on with my life. I'm thinking, do I want to move it to 40? I'm trying to think about how much I want to trail this. I'm thinking. Okay, where do we have? All right, we have some sellers. VWAP is up here. Is it going to just come up and get rejected? I don't want to lose money anymore. All right, so my stop's at break even. It's a freebie trade. The question is, do I just want to move it to here? It's just such high odds that it retests. I wonder if I should just take this money right now and move on with my life. But if I don't, I give it a shot. Just maybe I get really, really lucky and it gets smacked here. I'll give it a free ride. Whatever. The stops break even. The worst case scenario is I make $400 per account. I have how many ever accounts. So the odds of this testing my level are very high. I'd give it at this point probably 80% chance. But on the off 20% chance we just vomit from here, well, then I make a lot more money. 10 a.m. reversal, watch out. Yeah, I'm in a perfect world, I would have this trade done by 10 a.m. But I just want to illustrate the fact that I care more about the stop. The stop's at break even. I am not losing money on this trade. The question is, how much am I making? I've locked in 400. That's a guarantee. I could get out now and make 750. Maybe it comes up and tags me and it's only 400. Maybe it vomits all the way down and I make 1,400. I don't know. Like, we'll see. We'll see. Honestly, before when I said there's an 80% chance of it tapping now, it's probably even higher just because the market loves to retest VWAP the way it's doing right now. I might get a little lucky if it's a hard rejection at VWAP because VWAP's 52. I happen to be in at 54, but all right. Tag me out. All right, 400. Do I want to do one more trade today? Like I said, it's probably this perfect VWAP rejection. We'll give it a second. I don't need to rush it. We made some money. I mean, 25 accounts on 4K. That's about $10,000 locked in right there. Not bad. I gave myself a fighting chance. It just happened to not keep going. That's going to happen. There's a really good chance it keeps going. And if I was willing to take a bit more risk, it probably would have ended up being fine. Like, that shit happens. And unlike Friday where you guys saw me go on tilt, I was not going to move it at all, because you guys saw what happened on Friday where I just kept letting it go and go and go. And unfortunately, it cost me 5 of my PA accounts, and the other ones were fine. And I ended up making money because exactly what I thought was going to happen did end up happening. And we ended up vomiting, and I made a bunch of money. I made $2,000 on the 15 accounts. So I made whatever, $30,000. But in the middle, it was poor trading. There was a bit more luck involved than anything else. All right, here's a look at the Mag 7 flow. We popped until about 9:34, took a big hit at 9:46, and now we're recovering ever since then, but price not so much. Looking at the S&P 500, we are exclusively vomiting all day, and it is people actually selling calls. Puts are being bought a little bit. Remember, the puts are the dark blue and the light blue. The calls are the orange and the green. And this is actually a lack of bullishness, not so much extreme bearishness. So I want to call that out. VIX is continuing to spike. Oh, the VIX just took out the high from the overnight session. Right here, I just want to clarify, this is not Friday where my cursor is. That's 3 a.m. overnight. But I will be watching this high from Friday. I should probably set it up in alert. Fuck. Do I want to take this trade? But we might just be bouncing right here. 840. If you took the... Oh, sorry. I disconnected my headphones, so I have no idea what you guys are saying anymore. If you took this breakdown trade at 40, risking 57, that's a beautiful trade. Remember, I got knocked out at 54. It only went 3 more points against me. So this is what I hate about the psychology of trading is like, okay, so I see that. I'm like, oh man, Matt, only if you just gave it a little bit more, it would have been fine. And it looks like it's going in your favor. And like, you're good, man. That was my mindset on Friday, and I gave it a little bit more room, and it just went against me. And then I gave it a little bit more room, and it just kept going against me. And before you know it, that's where you start to lose accounts. So I get it, folks. In real time, I am streaming to you a frustrating situation where if I gave it a bit more room, it probably would have worked out beautifully. But you can't think like that, because even if 9 out of 10 times, 99 out of 100 times, it does break in your favor, it's not going to always break in your favor. And that one time it doesn't break in your favor is the time that you might lose your account. So if you think about the risk reward of it, it's just not worth it, because the game is over in that weird percentile chance that like it just completely hits you. So is it brutal? Yeah, of course, psychologically it is absurdly brutal to deal with that, but that is trading. Trading is a game of borderline paranoid risk management. And if you can do that time and time again and not kick yourself where things would have magically gone in your favor, it's all right. You're going to survive. It's a game of survival. Oh, I kind of like this trade right here because you could short at 34 and you're risking 12 points and you're playing this breakdown. I just don't really love the time, as an astute viewer called out. Be careful of the 10 a.m. reversal. I just don't know if I necessarily want to be messing around with it. 10 a.m. might completely dunk on this. That's totally possible. Or it maybe blows me out of my position and then I lose all my profits on the day. So I don't mind that trade. If you took this breakdown trade at 140, if you took this breakdown trade at 34, you're either risking 46 or you're risking 57. You're looking for this trend line to snap. That's a solid trade. You're trading with trend in terms of price action. You're also trading with trend the S&P 500 options flow, where we're seeing a lot of call selling this morning, a lot of call selling. The options market's getting beat up. The Mag 7 is showing strength. So that's a thing to consider without a doubt. That's definitely something to consider. Of why is there so much call? Well, it's a put selling. That's interesting. See how these puts are now just getting sold? And it's someone's selling a bunch of puts. Oh, it's 10 a.m. I need to wait a little bit. I don't need to rush it, but I do see the VIX going up. Remember, This is increase in vol. It's not always, but it is commonly associated with the market selling off. And that's exactly why we're seeing the SPY make a beeline to its closing value from Friday, which on SPY happens to be 682.12. And on SPX, it happens to be 6840. So watch those values. And remember, this white box, in my opinion, is the transition zone. Bullish above, bearish below, choppy within. So I'm curious if we're going to bounce right here and maybe get sent back up to 50, or if we're going to be testing the bottom side of the transition, which then sets up a test to somewhere in this 10-point region between 6825 and 6814. But if you're just joining in, I took one trade today. I made $400 per account. One of them was profit. It was one trade that had two contracts. One was knocked out at break even. The other one made me about 20 points of money. So that's about $400. So if this is my trade of the day and I'm done here, hey, it's going to be what it's going to be. But when you make $400 on 25 different accounts, wait, why the fuck is this one not turned on? Oh, I didn't toggle on the... for some reason, I just didn't trade on this account. Well, that's awkward. Well, hey, that's awkward. All right, and the bots are on. We have that video that we're making in the background. That bot's there. We're good to go on that front. We're good to go on that front. A little bit of consolidation right here. You're seeing a little bit of lower highs but higher lows. We almost snapped here at 9:59:45 heading into the new hours. Why traders use multiple accounts? Well, it's just hang on. Oh, let's see if we could lock this in. Come on. Come on. Lock it in. Take off the risk. I was a little bit chasey, which is why I was so aggressive with this first one. Lock it in. So the question was, why do you use multiple accounts? Well, if you're doing well, you make more money. Also, you could try different strategies. You could trade. All right, cool. Oh, so we locked one in there. The question is, where do I want to set my risk? Because this is quite far away. I would love to set it to 16, but I need it to snap 100 first. All right, so we're de-risking a little. Locked in $600 on most accounts, not all. Let's see. I'm worried about this bounce. I need to be careful here because this is the type of shit that I did on Friday that almost cost me bigly. I need to see if we confidently hold below. There's more people at 85. I think my big head is blocking this from you guys. Sorry, let me switch this up. But you could see right here, people are attempting... right here, 85 is where I see the next node. I wonder if I should just front run this. 85. 86. Do I like that? Or do I think that's going to snap? Oh, this is not what I wanted to see. That's exactly how I locked in one pretty quickly, just because Wednesday, Thursday, and Friday of last week, 26,100 was a big reaction level, a large reaction level, which is why I chased it a little bit. I should have been in closer to between 25 and 30. I could have locked in at the same one, and right now the stop could be at break even, and I wouldn't have anything to fret about. But right now, how big is this pullback going to be? I'm worried that the bounce might be all the way up to VWAP. And the question is, do I want to take on that much risk right now? Once again, I already locked in one. I only have one contract right now. But VWAP is up here at 50. Psychological level, it's just a key level. How can I play this more intelligently? Yeah, I'm seeing a chunk. A chunk's at 100, but there's a bigger chunk of people down here at 85, 26,085, which is for the time being, just in case there's a random flush. That's why I have mine at 86. But obviously, I'm a little bit more concerned about how large this bounce is going to be. I cannot repeat Friday. I cannot do that. I cannot repeat Friday. Oh, let's see. Yeah, we bounced right off of 40, that closing value. VIX is still climbing. That goes in my favor. Tesla's having a great day. Even though the SPY and the Qs are getting hit and VIX is popping, Tesla is all the way up to 471. Congrats if you're playing it. 25 accounts all at once or one by one. You could do whatever you want. That's up to you. You could trade 25 all together. You could trade 10 and 15. You could trade 5, 5, 5, 5. You could trade them all separately, all together. Like it's, you could change it per day. That's all up to you, which gives you, in my opinion, quite a bit of flexibility. Quite a bit of flexibility. Okay, I should probably use this as my risk. Is that smart? Hang on. I just want to make sure that I'm not being stupid. I don't want to kick off the week on a silly note. The VIX is climbing like no other. Okay, we de-risked a little bit. I moved my stop closer. Remember, this is already after locking some in. Okay, we have more people loading up here at 26,100, and you have quite a few here at 26,085. We're testing this first level. Let's see this 100 test. In a perfect world, like what I would love to do, just to kind of explain a little bit of my trading methodology and mantra, is actually I wouldn't even have this target. It would just go enough that I can move my stop to break even. So if it bounces back, there's no risk. But I don't want to overdo it today, because if this hits, I'll be up $1,000 per account. Oh, I really want to de-risk even more here. All right, slowly but surely taking risk off the table. We're dancing around 6,100. It could easily bounce or break, folks. I'm telling you, it's 50-50. I would love for it to flush to what I perceive to be an important level. I'm targeting this right here. You can see this giant, shout out to Bookmap. It's in the description of the video if you want to use it. But right here, 85. I'm front running it by 1 point. Maybe that's smart. Maybe it's not smart. Oh, but part of me does want to just put this. 1202.92. I could have locked in at 92. I'm just doing some crude back of the napkin math right now. Come on, flush it. All right, freebie play. Just hit it. Just hit it. Hit it, hit it, hit it. Freebie play, no risk. Freebie play, no risk. Freebie play, no risk. Come on, I just need, it got to 88. Mine was at 86. No. Fuck. Come on. Little pop and dump. Little pop and dump. Little pop and dump. Not enough. Son of a gun. What's it gonna be? It's right there. Dude, it got to 88. Mine's at 86. Come on. Come on, brother. Come on, brother. Fuck. Back to 100. That's probably not good for me. So close, yet so far away. All right, knocked me out. It happens. Knocked me out. Watch this. Give it 2 minutes. It's going to vomit right to that level. I just didn't want to take on risk, folks. What can I say? When I went up a good chunk of change, up 600 a pop, didn't want to take on additional risk. Dude, it's going to probably vomit right I told you guys, as soon as I get knocked out, that is your perfect opportunity to do the opposite. I'm telling you. Shout out to Chaos. 55 months. Everyone do me a favor. Stop what you're doing for 3 seconds and hit that like button and subscribe if you're new. Best boss around there. Oh, that's nice, Chaos. Very, very kind. He finally paid you, Chaos? Maybe. We're thinking about it. We're thinking about finally paying Chaos for his 80 hours worth of work a week. Maybe. I don't know. I got knocked out. Hey, I can't complain. I'm not here complaining. $600 and we made a good chunk. What I am going to complain about is the fact that this has not traded. How is... Oh, because we've only broken down. Okay. So two of the bots right here, the FFN accounts right here, FFNX and FFN have not traded yet. Just waiting for the bots to pop off there. Oh, this is kind of an interesting short right here. 20, risking 35. You're risking 15 points. Your risk to reward measure moved down to 88. Damn, dude, I was 2 points away on that bad boy. 2 points away. Does Chaos edit the videos? Yeah, and he makes the music that you guys hear early in the morning, among many other things. He's the producer of the show. He is the producer of the show. Do I keep him chained up in my basement? Of course. What else would I do? How else would I handle my employees? You guys don't keep your employees chained up in a basement? I guess we just have a different opinion on how to be a good manager. I guess we just have a different... Dude, Tesla is a runaway train, and then so is Amazon, dude. Amazon up 5%, up 5+%. Tesla up 3.4. Meta's up 1.5. Palantir's up 1.9. Remember, Palantir reports after the market closed today. All right, Mag 7 is still climbing. People are getting out of puts and they're buying longer duration calls. But when it comes to the S&P 500, it got hit pretty hard till 10:05. Classic post 10 a.m. Little bit of reversal. Did get a pop, maybe failing right here. Probably worthwhile to pay attention to a little bit. Looking at price. As I said, we hit that closing value. We pop back up to 50. 50 is massively important. This is a huge inflection level. No surprise whatsoever it wants to retest it. I would say this 1 minute bar at 10:08 was a little bit violent, but watch 50. If we get knocked there, look for the retest of 40. That's a nice 10-point-ish region. On the recapture, you might want to watch 55. You might want to watch 60, but let's see. We got a sell-off to a very important key level. And now we're seeing a little bit of profit taking from the short-term bears. We're seeing a little bit of bull step in. The question is it enough? This is specifically for Chaos. Mike, I promise you I'll make sure it gets over to Chaos. What is going the rate for the basement troll who pumps your ego on demand? Oh, they do it for free. Just love of the game. Absolute love of the game. Folks, very quick, if you haven't, don't forget to sign up for Public. They are the partner of today's show. It is my favorite place to trade options, and the answer why is because it's the only place I know of on the entire planet that you get a rebate for every single options contract you trade. Doesn't matter if it's a call or put. Doesn't matter if you're buying or selling. Check it out. It is free to download. It is free to sign up. It is pinned to the top of chat. Use that link because you're going to start out at a higher rebate tier. Shout out to Public. Hey, and all of a sudden, my stop for break even is starting to seem real smart. I got out. This is why you do it, folks. All right. So, okay, I think this is like a really, really good example. So over here, I got stopped out for break even at 54. Granted, if I gave it 3 more points of risk, I could have ridden that all the way down to 90. However, with a similar trade, well, this one was a little bit chasey. I didn't like that. I should have been in at 30, which is why I was even more aggressive with it. But anyway, I got in, and you could see here at 10:08, it was knocked out for break even. if I just gave that room to run, like I said, I'm worried that they're going to retest VWAP. So my fill is at 12. And right now I'm 30 plus points underwater because I had to withstand through that. Instead, I got out for break even. And if I truly think this is weak, I could reshort right now at a higher value and take on less risk. So even though like the whole coulda, woulda, shoulda thing at 954, well, even with the coulda, shoulda, woulda thing, that mindset, in my opinion, from a risk reward perspective, is superior because it helps me avoid this type of shit. Don't focus on those times that would have magically gone in your way. Focus on the times that if you didn't follow your plan, you would have lost your account. I think that is far, far, far more important. And I think anyone understanding the math of the market would also agree. But once again, as it always goes for this show, these are my own thoughts and opinions. Maybe you agree, maybe you disagree, maybe you're somewhere in the middle. I'm just here to explain how I approach the market and my mental framework because I'm just sick and tired of all the fucking Monday morning quarterbacking that goes on in the world of retail trading. And even though people can't show you in real time and they can't explain it in real time, they are all absurdly profitable when it comes to the world of Monday morning quarterbacking and the woulda, coulda, shoulda. Everyone is a lights out trader in retrospect. We all know that. We all know in retrospect that today you would have gone short at market open for a gazillion contracts. And here we are now. Like, Matt, how much of a stop loss do you typically use? I usually risk the recent swing high or low for whatever time frame I care about the trade. So that's very different for day trading right here on NQ versus my swing trades on my options contracts where I'm looking at like the daily and the weekly chart. So I use recent highs and lows because I'm generally trying to trade with trend. So when I care about the trend, I care about the succession of highs and lows. So right now we're in a downtrend. We have lower highs and lower lows. If we make a fresh high, well, that means that the trend is potentially changing, so I might be wrong on the trend. So for me, I like to use the technical structure as my ripcord moment where I'm like, oh, fuck, I'm wrong. But in terms of getting into the trade, that's when I'm going to start to use other pieces of information, such as what is the big money doing in the options flow. Mag 7 was flat, got hit, popping, showing a little bit of weakness right now. S&P 500, a lot of weakness, a little bit of a pop, more weakness right now. I'll pay attention to key levels. I don't necessarily want to short at a key level if we're trading down into it. I would have preferred to go short at 1013 because not only was that 850 on SPX, but right here, it was this failure at VWAP. This was a good trade. If you got in at somewhere between 40 and 45, risking 56, you're risking 12 points. And look at that. You already hit your first target of 26,100. Your stop's at break even and you have a freebie trade. It's this idea of understand that half your trades are going to make you money, most likely, and half your trades are going to lose you money, roughly. I'm not saying this is inherently true for every single trader at every single moment, but let's just work our math off of that. Okay, well, if you're going to be right half the time and wrong half the time, I don't think it takes a fucking Einstein level IQ to realize that you want to keep your losses minimal and your gains big. Of course. And yeah, maybe you want to get into negative risk reward where you have a super high hit rate and you're making $50 risking 1,000, but you hit the 50 a lot. Yeah, that's also viable. I'm not saying it's wrong. I'm saying, okay, understand how you're approaching the market. But basically, you just have to make sure that your math is actually mathing. Because I find a lot of people, they go for small wins, and as soon as they see a little bit of green, they take it. And when they have losses, they just let it ride. And eventually, you're going to get clocked doing that. Eventually, you're going to get very, very clocked doing that. Oh, okay, what the fuck? How did that not trade, dude? I don't know how. I need to look at these charts really quick. Oh, that's why it didn't trade. Okay, I know exactly why the bots didn't trade, because they weren't supposed to trade. In a weird turn of events, the bots are doing exactly what I told them to do. Please take note. The Russell's having a rough day. VIX is up. Pay attention to the VIX. If the VIX starts to clear 1850, the high from Friday, we saw that in Power Hour on Friday, we might get a little bit jumpy here. In terms of like, where's like the legit, hang on, I don't want to miss my trade. Like I've already missed a couple today. Fuck, did I just miss it? Hang on. Do I like this trade? People at 80. This is 12. 16 points of risk. 12 points of risk. I could get in with 12 points of risk. Do I like this trade? Yes or no? It is with trend. The risk isn't bad. Where were all these buyers? So these guys are at 80, so I'd want to front run them a little bit. I'd want to front run these guys. So 80. We just ran into... Oh, let's let this develop, because technically this could be a higher low, but we also haven't made a higher high. This was a pretty strong vomit. I didn't see the best entry. You could have taken this breakdown at 25 and you would have already made a bunch of money and your stop would be at breaking. So even if you took the breakdown at 25, if you got in right at VWAP around 45, those were both phenomenal trades. And if you took them and you like properly manage your risk, of course it did go in your favor, so you should be stoked. But more importantly than that, even if you didn't go in your favor, but you managed your risk properly, I think you deserve a round of applause. I really do. I think that's a quality trade. Even if it kept going, like, hey, this is a game. You never know the next bar. Like, I'm so sick and tired of people thinking that they could predict. Oh, fuck. I'm watching this little... Damn, should I have done that there right at 100? Risking 14. That's not bad. It would have put me slightly red on the day, which is fine. That's manageable. Slightly red on the day as your max risk versus maybe catching a waterfall. IWM is giving off some sort of alert. Here's a look at the Mag 7. Here's a look at the SPY. Oh, fuck. That was way too chasey. Okay, that's at 72. So we'll do this at 75. What was this? This is 116. All right, we'll give it a 1.5 of breath. 1.5 of breath. Hang on. I think my math is a little bit off here. I need to think about those take profit accounts. 63. Did I get caught up in a double bottom here? A little bit of a W setup. Let's see how high this is. I would love to lower the risk on this, obviously. I probably should have waited for this as an entry. I was a little bit chasey because, like, in my mind, and I'm not saying that this was right, I was like, but what if it just vomits here and I missed the trade as I already missed it back here? Fucking woulda, coulda, shoulda. 105. Can I use 105? Damn, this is more risk than I would actually like right now. It's a little bit more risk than I would like at this exact moment, which is why I'm looking at this high, this little spike, this little shoulder, head, shoulder. I'm hoping it's a shoulder, head, shoulder vomit rather than a double bottom pop. All those buyers at 80, I mean, I guess they're still seemingly there. Yeah, we just keep hanging out at 100. Like every single time. And we saw this on Thursday and Friday of last week. It just got really, like, it was tough to break this. Which makes me feel like a little bit of a noob, because then why in the world am I short below it? If I know that that's a key level, I should only be taking shorts above it and then using that as my risk line, which is going to get hit often, but it's a smarter way to manage, obviously, my risk. Fuck. Watching this, we just ran into 110, but look at that, right back to 100. really, really tough time breaking 100. Fuck. In either direction, I suppose. I guess if you're bullish, you're happy we're not vomiting below it. But if you're bearish, we just keep bouncing right off of it. Oh, let's see. I do see IONQ getting some sort of alert. IONQ breaking down, actually. And they are reporting this week, I believe Tuesday. But a little bit of a technical breakdown there on IONQ. What else is going on? Am I missing anything big? NVIDIA is up 2.8%, intraday not doing the most. Microsoft is up 0.5%, intraday not doing the most. Apple, after hitting an all-time high, a little bit of a breather, sweeping out the last 1, 2, 3, 4 lows. Amazon, another new all-time high. Tesla having a cup handle, higher lows, looking really good. Meta, not so good, gap down, not really trending. Palantir, new all-time high going into the earnings after the market closes today. AMD is doing what? Flat, no real trend. Avago hitting an all-time high, little bit of a breather. Hood, lower high, but higher low, consolidation. SoFi, a new higher low. Maybe this leads up to a new all-time high. Oracle seemingly going for this downside gap fill at 243.49, the high from right before its earnings. CoreWeave, lower high. Oklo, lower high, testing that 50. Oh, shit. Wait, what was that? Oh, that was the bot. The bot, 195 right there, right where my cursor is. Oh, and that locked in. Dope. Okay, how is this looking? So they're up 1,000 each, roughly at this 80 level. Should I just move my stop to break even and it's a freebie play? I think that's probably the smart move. It's so early though. Do I do it? Yes, no, yes, no. Chat, help me out. Stop to break even. Yes, no, yes, no. Folks, I need you to answer. I understand there's like a 5-second delay. I need you. Stop to break even. Yes or no. Thumbs up, thumbs down. Thumbs up, thumbs down, people. Thumbs up, thumbs down. You guys are way too slow. This is the last time I ask you to be my financial advisors. This is the last time I ask you to be my financial advisors. Oh, what a day. What a day. Stops at break even. It's a freebie. Bada bing, bada boom. 1.5K per account. I made it on 1, 2, 3, 4, 5 take profits. I made it on 20 apexes, excluding 400 here, but then I made up the 400 on the FFNs. Folks, who does it like this? Name one other streaming trading influencer who calls out the trades beforehand, does it all live, 100% transparent, shows you literally every single trade. The thought process, the reasoning, no Monday morning quarterbacking, no screenshots, literally done live. Who does that? No one else does it. No one else fucking does it like this, brother. Everyone, it's second to none. It's second to none, folks. Seriously. Try to name me one other streamer who streams their actual trades. Trades, yeah. All right. Maybe we shouldn't keep kicking that guy while he's down, because I think he's like $1.5 million in debt and he ruined his life. It's actually kind of brutal how bad he does it. 40 Indians every morning. Touche. I can't argue with that. All right, here's where we're at. The key level right here is 25. That is a key gamma level right here between 25 and 15. And then you have some people targeting 6,800. So basically, if you're playing SPX right now, you have this messy 15-point region. You have a key gamma level. Dude, Bitcoin's getting fucking clocked right now. Yeah, Bitcoin just took out this low. The next target low, if you're playing Bitcoin to the downside, is 103.5. How is the Russell? The Russell's getting fucking smoked right now. Oh, that's interesting. Just to people wondering, I'm up a cool 19.5K on my swing account. Matt, you're only really good at day trading and scalp trading. We would love to see you swing trade. Well, that's right there. 19.5K. I'm up 14K on IWM. I'm up 6K on VIX, and I am down 9% on QQQ and SPX. Just a nice $20,000 day on top of making however fucking much money this is. 40K maybe, 35K. Rips, I've actually heard a lot of good things about Rips, and I've seen some of his tweets and whatnot, and I like the guy. I just haven't had any interactions with him, but from what I've seen on Twitter, it seems like the guy does numbers for sure. So I guess if there were one person where I had to be like, yeah, no, those numbers are like seemingly pretty impressive, I would agree with you. Like I said, I haven't had any interactions, but from what I've been told on social media, it seems like the guy does some pretty impressive stuff. Trade Brigade. I don't know who Trade Brigade is, so maybe absolutely phenomenal, maybe not. I don't have any fair commentary because I don't know who Trade Brigade is. Can I look at rum? Remember, I don't actively trade rum. I'm invested in rum. Ooh, that's a technical breakdown. That's not good. You have support in the 5s. You have support in the 6s. I don't actively trade it, but once it pumped, couldn't hold the flag, started to break back down. But remember, think about rum. Like it's going to be tied to the Russell. The Russell's breaking down right now. Rum's breaking down. The whole when the SPY is puking, the Qs are puking, the Russell is puking. My base case is that things should be puking, which actually in a weird sense makes Tesla's push that much more impressive. Right now, crypto's getting hit, small caps getting hit, tech's getting hit, overall market's getting hit. So when things are getting hit, I think, oh, that's pretty much par for the course. What's impressive to me is when I see the things that are bucking the trend, such as Tesla and Amazon. If that makes sense. If that makes sense. All right. The Qs are going for their closing value. It is right here. It is the white line on your chart. The SPY already hit the closing value and we're vomiting. I'm telling you the levels. You have 10 points of support right here between 25 and 14. 14 is the low from Friday. If this 10-point region right here does not hold, you're looking at 800. If that doesn't hold, you're looking at 85. And if we break 85, well, you better get into the Discord because we're going to have to draw out some lines, but it would be 770. 770 would be your next reach target if all hell starts to break loose. What's more interesting here, where are we at? 820. Where's 820 on this? Oh, right here. Yeah, we're running into support here. This node. We're going to be running into this support. We're literally at this support. So from that point, yeah, watch 800 and then 880, which I already have marked out, and then 60 and 70 have some plays. Looks like from early this morning, someone started playing 70. So we're also at this hedge wall. This is a key area. If it bounces out of this 10-point region, no one should be surprised. It is support. When you come to support, 50-50 shot, you bounce or you break, but it's more of like that's a zone that you might want to play it from. At any given point, you have 50-50, but just because you have 50-50 chance doesn't mean you have 50-50 risk reward, which is why we identify these key levels. This is a key region. If it starts to bounce out of it, you could risk the recent low, play it back up to 40 to 50. If it starts to fail, you could use whatever this recent high is and try to play it down to 800 to 85. And then following that, the next level would be 70. And that's based on the current positioning within the market. Of course, the market's dynamic and it changes, but we're just We're all awkwardly waiting right here. Awkwardly waiting. And I should also point out that the VIX is breaking out. Watch 1935 on the VIX. VIX, V-I-X. Remember what the VIX is. We had a really good conversation in Discord about it last week. I know commonly the VIX is thought to be the inverse of the S&P 500, but that's not actually what the VIX is. The VIX is the volatility of the options contract for the S&P 500, the one that is theoretically perfect 30 days out. So once again, it is the volatility of the options contract if we had an options contract that was exactly 30 days out. So it's actually kind of like a complex computation of how we make it, how we don't make it, blah, 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 blah. You get my point. So commonly, volatility of that contract will increase if the market starts to go down. That's why we think that there's an inverse relationship, and there is an inverse relationship, but it's not like it just does the opposite. So if someone like, does VIX move generally the opposite way? Yeah, it does. But what is the VIX actually measuring? It's measuring the volatility of the options contract with 30 days to expiration. And you can see how it's like here, VIX calculation. If you want to know the actual calculation, it looks a little something like this right there. It's pretty complicated, but you get the point. This is actually a pretty good explanation, but I just want to kind of remind people of like what it is and increasing volatility. And then that's where you get into the interesting world of vol skew. And you could kind of see that right here. Vol's definitely up today. Term structure, volatility skew. There's various tools that I guess just to attempt to bring these all together. Calls are still expensive. People betting on the 7,000s and the 7,000, any call, if you're betting on calls, you're overpaying right now. Like, you are definitively overpaying. You know you are overpaying because the line is above the cone right here. So these call people, the people long calls, not only did they overpay, but because the market is going against them, they're really getting in trouble right now. They're really fucking getting in trouble. All right, I'd be looking for the Qs to touch the closing value from Friday, and I'd be looking at the VIX to break out of 1935. And for SPX, I'd be looking for the breakdown of roughly this 10-point region. You have a lot of people structured at 25. You have the closing value of Thursday at 20, and you have the low value at 20 from Thursday, and you have the low value at 14 from Friday. So 2 important technical levels, 1 important gamma level. Watch this 10-point region. If it doesn't hold, 800, next level 85, next level 770. Once again, that's just all of the positioning from right here, from like basically just big money positioning. All right, we talked about vol. We had that. Vol's picking up, team. The Russell's also, hang on. For those of you playing the Russell, oh, the Russell's officially breaking down. Holy shit. I need to set an alert, ad alert 4150. We're coming up to that 50 EMA. I wouldn't mind taking some of my profits right there. It's at 4120. I have an alert at 4150. What time is it? 10:37. It is 10:37. Where are your kids at? Do you guys remember that commercial? It's 10 p.m. Do you know where your kids are at? Yeah, they're smoking crack cocaine with the hobo under the bridge. Is there a problem, officer? Is there a problem? Crack cocaine. All right, I'm just updating some of these bot things. What are the taxes on what? Taxes on, The taxes on Apex stuff is not capital gains. It is like contractor income. You're paid as a contractor versus a normal trading account where you would have, based on your locality, quote unquote, normal, I guess, fees on that. Remember, there is, and I'm by no means a tax professional, but to my understanding, there is a tax advantage trading futures versus equities. It's like this weird 60-40 rule. All right, we got to the danger zone and buyer stepped in almost as if it's exactly where I called it. Wow, that is a surprise. Color me shocked. If you took this bounce opportunity around 25, you were initially risking 20. It's now up to 33. Your stop should be at break even or like maybe slightly against you, maybe like by a point. But I obviously didn't take that play because I already made all my money on the day. I'm done on the day. The two bots hit 195 each. Sick. Awesome. Let me move on with my life. My Icarus situation where I'm manually trading my robotic system made 1.5K on about 25 accounts. So that is about $37,000 roughly. Not a bad situation. So yeah, if you took that bounce, your stop should be at break even. Well, definitely now at break even, but this is the point of watching key levels. I had no idea if we were going to puke or bounce. We're bouncing, but the point is you had the opportunity at 1036 to risk a couple points or this recent low. You rode it up. Great. Stop break even. Maybe it goes to 40. Maybe it goes to 50. Maybe it turns and knocks you out for break even. You don't know. For U.S. citizens, does Apex provide proper forms once you have a successful payout in this year? I would assume so. I'm not 100% sure because I have a tax person. I am not informed or knowledgeable, or nor do I care enough to do my own taxes. So I have a tax person who has all my stuff for me, and I just give them a bunch of forms. But I would assume yes. My base assumption is that at their size, they are not playing loosey-goosey with the tax man. I would assume at their size, they are in fact not playing loosey-goosey with the tax man. SPY is a gap to 678.47. Yes, there are various gaps on the chart to pay attention to. 678.47, and then you have another gap to 672.71. On the Qs, you have a gap to 618.42 and 611.37. The Russell has no gaps. SPX, you have a gap to 6807 and to 6749, and on NDX, you have a gap to 25,418 and 25,126. Downside gap fills from Thursday and Friday of 2 weeks ago. On SPX, NDX, SPY, QQQ, the Russell doesn't have any at this moment, at least within close proximity. I believe if you look on the full chart, there are still gaps, but I'm talking about like something of interest for this particular week. Any other questions? Do you guys have any questions on the Goonie Trading Discord? Do you have any questions on Public as a brokerage? Do you have any questions on Apex or Take Profit Trader or Funded Futures Network? Do you have any questions on Spot Gamma? Do you have any questions on Positive Negative Gamma? Do you have any question on influencer drama? Do you have any questions on our Lord and Savior Jesus Christ of Nazareth? Do you have any questions on my cat Piper? Do you have any questions on Ned, who I believe is officially dead? Can you guys see Ned back there? Pretty confident Ned is now dead. So I am, I don't know if I'm willing to field questions on Ned being dead at this moment in time, but you can kind of see how part of Ned's body fell. See, like right in front of the bull right there, right where my finger is. Hang on, I'm backwards. But see right there? See right where my finger is. I think there's a part of Ned right there. So willing to answer all those. Why are you gay? I would assume genetics, brain chemistry. I don't know. No shave November. I don't know. Maybe. My wife gets really, really mad at me when I do that. She, in fact, then calls me gay. Are you going to do a trade copy or how-to video? I didn't have like interest in that just because there's already so many. If you feel like there's maybe questions not being answered in the other ones, let me know. But it's one of those things that once you use it once or twice, like it's not really that complicated. What are the odds of the government reopening? Right now, the odds are reopening mid-November is where the current prediction market is at. Did I see Sydney Sweeney's dress? Yes, I also saw her boobs. And dare I say it, they made me not gay. Let's talk about Penn State football. You mean something that is near and dear to my heart that is just completely blown up in my face? Has there ever been a worse fall off in college football? Going into the season, there were many pollsters that had Penn State as the national champions. Not just a good team. There were many, many polls putting Penn State in the top 3, some specifically saying the national champions. And now we don't have a quarterback, we don't have a coach, and we're not even ranked. I don't think there's been a worse fall off in college football than what happened at Penn State this year. Do you think having accounts with multiple sim to fund it is the best way to continue scaling my day trading? If you're a profitable day trader, yeah. But if you're not yet profitable, save yourself money and work on one account at a time. Ohio's probably, well, Indiana's really good too. But right now in college football, I would bet that the winner's either going to be Ohio or Indiana. And if I had to bet right now, probably Ohio. But Ohio and Indiana are both very, very high quality teams. If you just wanted to put your money into ETFs, which ETFs would you choose? What percentage, i.e., VU and Qs? Okay, so like, remember the VU and the SPY are the same things, basically. It's like, what are they tracking? I know they're distinct entities, but like they're tracking the S&P 500. If I had to do an ETF, for me personally, I would say, like for a long-term account, split your money up between the S&P 500, the NASDAQ 100, gold, and Bitcoin. I would lean more. I'm a little bit more risk accepting, so I would personally lean more into the NASDAQ, but that's up to you. You'd come up the ratios that is like appropriate for you and your risk tolerance. But if you wanted to do something super basic that is still probably going to outperform most hedge funds in the long term, S&P 500, NASDAQ 100, Bitcoin, and gold. Like that has been a very quality 4-tier setup, and it, in my opinion, it will remain a very quality selection in terms of a long-term investment account. What is the difference between starter, core, and scale evaluations for funded futures? I don't know. I use FFN, Funded Futures Networks, not Funded Futures. I know those are very similar names, but they're technically two distinct entities. With the Funded Futures Network, if you blow your accounts, do they auto reset the following month? Yes, if you don't kill your like monthly payment, they will reset. Matt, I know this is a day trading school, but do you ever talk about long-term accounts, like if new stocks, when you add them levels like DCA into a yeah, I do, but that's more of a thing for the Discord because it's more of just like a slow-moving thing. So, for example, the last thing I did, and the Discord was well informed about this, was in April. A lot of my cash in my accounts at that time, I turned into stock. So I bought that dip in April. Well, I could show you the exact day I did it. It was this day right here, the 9th. On the 9th, I took all cash to my name and punted it into my accounts, and they're up a lot ever since then. So as soon as I first got the inkling that maybe the trade war was going to calm down, so I felt really stupid for about a week and a half because it was somewhere in here. And then as soon as it got into May, it's been like nonstop runaway fun. But as a long-term account, I just don't change it that much. It's not like, oh, I'm secretly like rebalancing, doing this and that, and there's all this stuff is going on. It's just, it's a very slow-moving thing. And I mean, I can't say there hasn't been a full year that I haven't touched it. I feel like that feels a little long. It's just like I pick the core things and I'm in it as an investment. So I'm not letting like a daily or weekly or even a lot of the times a month movement like shake me out unless my risk is hit. I'm new to your channel. Over, by the way, do you only use public to trade? It depends to trade what. Like, for example, I trade crypto elsewhere. I trade futures elsewhere. But for stocks and options, yeah, public is by far my favorite place to trade. What are my thoughts on Intel? I think it's actually kind of, in the world of semiconductors, I think it's a weaker play until the U.S. government got involved. That kind of changes the dynamic. I don't think it's going to be one of those things where no one's going to be surprised if Intel keeps getting amazing deals. And once again, the U.S. government's involved. So I don't know. I'm a big fan of Avago. I'm a big fan of NVIDIA. And I don't think that the government relationship with Intel is going to somehow make me like it more than I like Broadcom or NVIDIA. I also like ASML because that's making all the machinery for all these companies. But I also don't think you could go wrong just picking the entire semiconductor sphere. If you're a person, you're like, hey man, I don't want to pick like the individual winning semiconductor play. Just play the entire gambit and play SMH or Soxel or something like that. Soxel is the leveraged semiconductor ETF. SMH is the ETF, or you could go buy them individually in whatever proportions you like them. Are you going to trade crypto on the new prop firm coming out, Warbucks? Absolutely not. OSRS or RS3? OSRS, 110% of the way. If you're wasting your time on RS3, you need to get your fucking head examined. That is trash. OSRS or die. Intel has always been the government. It's in the name. I see what you're saying, but ever since Trump basically said, give me 10%, it's changed the dynamic. I'm also not necessarily the most comfortable with the government getting involved like that, just getting kind of shoving its way into the private sector. Not necessarily the biggest fan, because then how do we know if it's winning in normal market competition and capitalism, or how do we know if it's government overreach? Do we know which company the U.S. government is investing in quantum computing? Not to my knowledge. Maybe it's out there, but I don't think the U.S. and government not to my knowledge, they haven't picked any of them. Change the dynamic. You mean literal fascism? No. I think what you mean is figurative fascism, but that's not what fascism means. Most people don't really understand the word fascism. It's popular to say now because of all the anti-Trump rhetoric of he's a literal fascist. And if your definition of fascism is simply just what Wikipedia tells you, you also just don't know what fascism means. There are literal books on the fathers of fascism, and you can read it and understand theirs, but I think what you mean to say is figurative fascism, and I'm not saying that's a good thing. It's I don't support the bastardized version of it in Wikipedia or the actual definition. I'm not going to be a fan of either at any point, but on a side note, I think there's a lot of commentary of it's literal fascism, and that's not what it is. Look up the original meaning of fascism from Italy. That's what I'm talking about. And this event within the U.S. political system does not meet that definition. I get what you're saying. It is the figurative definition of fascism, but it is not the literal definition of fascism. Do I think gold has more room to run to the upside, or is it running out of steam? It depends on your time frame. I think perpetually into the future, the U.S. dollar with other fiat currencies will continue to be debased, which makes me a fan of metals such as gold and silver. Makes me a fan of just hard assets in a general sense, including whatever stocks, houses, gold, silver, that type of a thing. So does it have room? The answer is yes, and that's true for any time frame. But then, in terms of what is statistically likely, what is the highest likelihood pathway, well, that changes based on the time frame that you have in mind. Every college ever to get Fed bucks also does quantum work. Right now, no. It works in theory and it works on very unique, specific problems, but there's no like widespread, publicly available, functioning quantum computer. And actually, a lot of the companies right now that people are trading for quantum computing, like you can read the commentary from the CEOs and this and that and the other thing, but they don't really have goals of being profitable. They don't have goals of having a publicly available quantum computing network. A lot of them are more so like theoretical research on the subject matter. Right now, there's very evidently a quantum computing hype wave, and mark my words, write it down. November 3rd, 2025, Kohrs is putting this out. If you go far enough ahead in time, I think quantum computing is going to work, and I think it will be a thing. But the current companies that are running with it, I think from a chart perspective, it's going to look like pump and dumps. I think there's too much hype. There's too much FOMO. I don't think there's enough science that backs it. I think there's a lot of theory that backs it. But when it comes to reality, from a business perspective, I think is a really cool like science tool, something that should be researched. But from a business perspective, what you're seeing is FOMO. Like you are exclusive in the world of equity trading. All these quantum computing stocks are greatly overhyped, and it's FOMO. And that doesn't mean you can't make money. You can make money on FOMO plays. I just wouldn't consider any of the current ones long-term investments. I would consider them all active trades. I think you could play it actively to the upside, and when they start to break down, I think you could play them actively to the downside. I think they are active trades, not investments. Not profitable yet, but we aren't far out. I think we are many, many years out from a quantum computing company being profitable, less like very profitable. When you say far out, I don't think you have an appreciation for the science behind it. Or like I'm basing my thoughts off the commentary from the CEO and the people running these companies, not from someone against it, like literally internal to the own company. And it, like, as soon as you realize that so many of these insiders are selling their own equity position into this pump up, that's exactly what we saw with AMC. It tells me that like all the rats are leaving the ship and it's not going to last for long. If someone is in a company and they believe in it, why would they ever sell stock? And then on the flip side, you see them pretty much all hemorrhaging their stock. I can't buy it. I can't buy it. It makes no logical sense right now to argue that quantum computing is a worthwhile investment when the people running the companies are selling their own stock. If they think it's a worthwhile investment, why wouldn't they be keeping it? Most big stockholders have liens on their equity. Yeah, and so what's your point? What does that have to do with them selling? Yeah, you go get more loans then, and you pay it off with the rise. You don't hemorrhage all of the stock you have. Sounds like AMC. There's a lot of similarities. Obviously, the FOMO hype wave that we're seeing in quantum computing is nowhere really near the size of the FOMO hype wave we saw in AMC, but there are similarities without a doubt. I'm late. What happened to make the stock market crash? You know the SPYs break even and the Qs are plus 0.4% on the day. You're calling it a stock market crash when the NASDAQ and the SPY are green on the day. Maybe they like to diversify their holdings. If their company went way up, it's too high of a percentage of their holdings. No, it's because they know it's bullshit. Dude, fucking, I mean, whatever. I have a bridge to sell you, you guys. Like, Jesus Christ. Like there's too many. I don't understand the concept of, and this only happens in the world of retail trading. And in fact, the professional Wall Street is completely the opposite. Retail traders pile into a trade and then they look for every reason under the sun of why it's going to work. And it's like this cognitive dissonance and they ignore all the red flags. And it's even shit like that of like, no, maybe they're just trying to diversify. Well, professional Wall Street is the opposite. If they're in a position, they exclusively look at everything that can go wrong, to the point where it's like the extreme other one. Like, they're like, tell me all the red flags. What are the red flags? And retail traders just never learn it. And that's why you still see people thinking AMC is going to pop. Why you still think people that like think GME is going to go up. You still have people who think Open's going to squeeze and be the next thing. Like, fuck, man. I don't like the retail trading community. They're just so fucking gullible for every god thing that like everything that happens. They put money into it and then they contort it and they try to argue and reason why it has to work. And it's literally the exact opposite of people who make money. The exact opposite of people who make money. It blows my fucking mind. All right, this is our first real bounce of the day. It's actually worked out exactly to how we called it. We called the dip zone. We called the entry. We called scale out, scale out, scale out. Now we're at that next test where I would probably be done here. If I caught that bounce, I would be done. Just because target 1, target 2, target 3, I'd be out of the play. And now at this point, if we start to see double top weakness and we snap 40 and we snap 35, then we get to play it back to 20 to 15. Easy peasies. A friend of mine was selling every chance he got in the 2000 shit boom. Coworkers said he was crazy. They lost big while he is a millionaire now. Yeah, that stuff happens time and time again. Time and time again. And I don't know, like the fact that people trying to rationalize being bullish on a company when the insiders to that company are selling is probably the dumbest fucking thing. And I've heard a lot of dumb things in the years that I've been involved in the retail trading space. I see it every like 3 to 6 months. There's like a hot thematic trade. Right now it's quantum computing. And then no one gives it. Yeah, they're like, no, it's going to keep going. And then you're like, well, why are all of the insiders selling? And they're like, well, it just, I don't know. It's good. It's actually bullet. Like, it's all this stupid fucking reasoning. And then you give it enough time and it all dies. And then they just never learn. Ever, 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 ever. Do you know how many people I had to fight with when AMC was dying? And then all of the board members were selling all of their stock. And everyone's like, oh, it's the fucking dark pools, brother. It's Citadel. It's like, dude, Adam Aaron, the CEO, has made what, 40, 50, 60, 70, 80 million dollars from selling his own stock when telling you guys to buy, and then you're blaming it on fucking Citadel? This rant reminds me of 2021. It's going to be the same thing. I'm telling you, like, give it enough time. We called it out on this beauty. Wait, wasn't it PHH? What was PPH? No, it was PPH, right? Or was it PPH? Whatever the fuck this one was. No, it's not that one. That random Chinese stock that people were stoked about. You're going to see it on open. This one's going to die a horrible fucking death. We called it out on Workhorse. Look at that. Was I right? 100%. AMC, any pop is to be sold. Look at it. Worked out there. GameStop, same thing. Pop to be sold. Like, how many times you have to see the exact same fucking example and to be like, no, it's different. Look, it's gonna be different this time. I swear. Like, okay, whatever. I can't convince you to not do something completely fucking retarded with your money. I could show you the evidence that you should be considering, but if for some reason you're like, nah, man, dude, this one's gonna be different. All right, I hope it is. I don't want you to lose money. Oh, just a nice 10% drop. Do you guys not see the fucking similarities? Like, am I just like talking to the wall here of like, yeah, no, dude, it's gonna work out. It's gonna work out. All right, I hope it does, but understand you are playing with fucking fire. And when it comes to the fact that none of us have an infinite amount of capital and there's such thing as capital efficiency, maybe you should be putting your money where you have a better shot, not on dumb fucking plays. Dumb ass plays, but hey, whatever. I'm not your mom. I'm not your mom, but I am opening applications in mid-November to be the mom to a select 20 of you. So I know applications have been shut down for a little bit, so we are reopening the Matt Kohrs Mom Program. So if you missed out on the past couple times we've run this program and you are interested in me becoming your legal and spiritual mother, we will be reopening applications in mid-November. So if you want to start writing your essays, working on your slideshows, maybe really polishing off your talent show performance, we're opening it up. And we're going for the full thing. Like legally, I will be adopting 20 of you. Matt Kohrs Show, you're 100% right and have always reasoned with people. Sadly, most people have the hardest time admitting they're wrong. That's the main reason they are losing traders. Yeah, and hey, it happens to me too. I was unwilling to admit I was wrong on that trade on Friday, and it cost me 5 of my eval accounts or performance accounts or whatever on Apex. It happens in the long term. It happens in the short term. We all want this idea of making a bunch of money for minimal effort, and when things start to go wrong, we are wired for whatever reason, to not admit it. Something in our stupid little monkey brains, we are uniquely bad at admitting it. And if there were one skill that you should truly work on honing, it is, especially when making financial bets, be like, nope, if it hits this line, if event XYZ plays out, just admit you are wrong and move on with your life. That the best thing you can do. All right. I think that's kind of it, team. I think that's kind of it. Matt's favorite part of the show is when he says, "I'm not your mom." Runner up is when he starts calling people retarded. Love this show. the summary of the Matt Kohrs Show. Oh, Jesus. To be fair, I'm seriously considered joining the Discord and investing in a yearly spot with Gamma service. I need to educate myself on these trading bots. Godspeed. All right, folks, let me set up some alerts and breakdowns. But thus far, we've had a pretty fucking kick-ass Monday. So I'm happy how we've kicked off the week. I will remind you later, but this week I will only be streaming Monday, Tuesday, Wednesday, and that's it. I will not be streaming Thursday or Friday because remember, I'm a really cool person who does a lot of really, really cool things. And because of my previous commitments to doing really, really cool things, I will not be here on Thursday or Friday, but I will remind you guys of that later. But I appreciate all the good vibes. Shout out to Public. They are today's stream partner. Sign up for it. It's pinned up to the top of chat. It's in the description of the video. Start earning those rebates on your options trades. Make sure you use that link because you're going to start out at a higher rebate tier. I'm going to go hang out in the Discord. I appreciate all the good vibes. I hope you guys have made a fuckload of money today. And if you haven't already, well, I hope you make 2 fuckloads in this afternoon. That's what I have for you. I appreciate all of you. I thank you for all the good vibes. We're going to be posting an update video later on today and then streaming tomorrow morning, 9 a.m. bright and early. I hope to see you there. Peace.